Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
That's right. Welcome to the U.S. Market Update. I'm Emaad, Akhtar. A quick recap of how markets fared on the 1st of July stateside. The Dow Jones Industrial Average climbing as investors rotated out of tech stocks to kick off the second half of the year. Investors were also weighing the latest developments with President Donald Trump's giant tax and spending bill, as well as comments from Fed Reserve Chair Jerome Powell. The S&P 500 inched down 0.1%. The Nasdaq Composite lost 0.8%. And the blue chip Dow was the outlier, gaining 0.9%. Traders dropped tech giants such as Nvidia and Microsoft and opted to snap up shares of healthcare companies instead. Well, let's dive into what has been transpiring in the markets with our very own Todd Rabold, investment management partner at Callan Family Office. Good evening to you, sir, in your neck of the woods.
Good morning, Emaad. Thanks for having me. Good to be back on your show.
Yeah, good to have you back on. Now, July is typically or historically a good month for markets, but they didn't fare as well as they did the previous 2 days on the 1st of July. So the Nasdaq and S&P 500 closed lower, and they were dragged down by weakness in large cap tech stocks. Investors may be taking a break to gain some profits?
Yeah, I think that may be the case. A couple of days doesn't make a market, but July tends to be the strongest month of the year for U.S. equities, and we just hit a new high yesterday, and it's been a couple of really strong weeks and months, and so, maybe taking a pause isn't such a bad thing.
Yeah, that being said, you still see the AI theme continuing to be a major driver of innovation and opportunities moving forward. Is that correct?
Yeah, we really think there's a pretty significant opportunity in the technology space, specifically artificial intelligence. And, you've seen a number of companies. You mentioned NVIDIA, Taiwan Semi, Amazon, Google, and a long list of names that are the initial beneficiaries of the AI transformation that's going on today. And we think we're in the early innings, right? So there's plenty of opportunities that this technology will create for many companies that will be able to utilize that technology to run their businesses better, improve their revenues, and so forth. And in spite of those companies doing exceptionally well, the big ones, we do think that the market will broaden out over time over the next couple of years. And this trend, probably has significant legs for a number of years.
Let's talk about another big development that occurred on Tuesday, and that was the Senate passing President Donald Trump's mega bill after days of negotiations. The final vote was a pretty tight one, 51-50, Vice President J.D. Vance casting a final tie-breaking vote. Next, it goes through the House of Representatives. Do you expect it, Todd, to face any kind of gridlock there?
Yeah, it's tough to tell, Emaad. I do think it's going to be a very close vote. Ultimately, we do believe that it will pass the House. And the expectation by the current administration is that the bill will be delivered to President Trump on July 4th for his signature. We'll just have to see, how it plays out. But the Senate's bill and the original House of Representatives bill aren't really far apart. So there are some nuances that may create some additional negotiations. But we're optimistic that this will get done in the coming days.
Yeah, there's a certain aspect of the bill that I'd like to hone in on that perhaps we haven't touched on in the past. Now, Donald Trump, as we know, has been on an anti-green push for a while, and this has kind of been manifested in the form of the fact that some of the green energy tax credits in the bill will be scaled back in an effort to save funds that would be redirected toward border security and national defense. Now, this might be a contentious move and maybe even affect Tesla, whose boss is the very man who has publicly criticized the bill Mr. Trump is trying to pass. Your thoughts on that?
Yeah, I think it's unfortunate that the relationship between the president and Elon Musk has gotten to where it is. They're both brilliant individuals in their own right and clearly had some disagreements in the recent months. Tesla could be impacted by these reduction of green energy credits. In fact, they likely will be, given the removal of some of the incentives to buy EV cars. But I think Tesla's a company that can continue to do well over time after, getting through a choppy couple of months. They are very focused on AI, and they have a robust robotics program that we expect to be a very significant revenue generator in the coming couple of years.
Yeah, so Trump and Musk dominating news headlines, and also Fed Chair Jerome Powell, who spoke at the European Central Bank Forum on Tuesday. He said the Fed would have already cut rates had the tariffs not been announced. What's your take on that?
Yeah, so he's been very clear over the past couple of months as we've been going through these tariff negotiations that he has a major concern that will lead to an increased inflation here in the United States. And it's not clear that will happen, but certainly tariffs could be construed as a negative when it comes from, inflationary pressure, supply chain disruption, and so forth. I think, the backdrop there is that most folks in the financial community here in the United States thinks that rates should be cut, that rates are too high. Inflation is much lower today than it was even a year ago, 2 years ago, but it's not at the Fed's target of 2%. So, it's been interesting, but Chairman Powell and President Trump are clearly at odds as to where they think interest rates should be today.
Yeah, and those rates may need to be cut should the labor market continue to slow. Jobs report, nonfarm payrolls is out on Thursday. It's expected that payroll growth will slow. Is that on your radar as well?
It is, and we had some job data that came out today that was fairly benign. We'll have additional job data that comes out tomorrow and then Thursday, to your point. It's our view that there's going to continue to be a bit of softness in the employment market. And I think part of that has to do with just some of the uncertainty that surrounds the tariff situation, which we can certainly discuss. But, when the Federal Reserve thinks about setting interest rates, they think about the employment market and inflation. And so if you see some weakness in the employment market and inflation stays steady, call it at 2.5%, it really does give the Fed ammunition to cut rates should they decide to do so. So our best guess at this point is the Federal Reserve will cut interest rates twice between now and year end, most likely starting in September. And those cuts would be modest, so 25 basis points or 0.25% each time. But that 50 basis point cut would be pretty impactful, I think, for both the U.S. equity markets and the fixed income markets. I think investors would react quite positively to those cuts.
So, Todd, against the backdrop of everything we've discussed, how should investors be positioning themselves in the current market environment, just to finish things off?
Yeah, we're still pretty optimistic that the equity markets, both domestic here and internationally and globally, will continue to do well. We do think that the economy will continue to grow nicely. We've seen strong corporate earnings growth here. In Europe, you're going to see additional defense spending that'll be an economic driver. And so we remain quite optimistic that stocks have, a pretty decent runway between now and year end. So we think that investors were rewarded for staying the course during the market correction that we all experienced a couple of months ago. And we look for markets to go higher from here.
All right, so optimism, hopefully the theme for the month. Todd Rabold is investment management partner at Callan Family Office. Todd, thanks for your time and insights, and have a great evening.
Thanks. You guys have a great day. Appreciate it.
Thank you. You're more than welcome. Stay with Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.